Hey, good morning, guys. What did you think of last week's gold and silver performance? Well, as you know, both gold and silver declined last week for absolutely no reason except for the need of the powers that be. Now, there was a hit on Wednesday, and they said that was due to the release of the Fed minutes, and that was actually a non event. It was advertised by the media that there was more hints of delaying QE3, but in fact, there was nothing new revealed that they hadn't already stated the week before. Like so many other times, there doesn't really have to be a reason for the elites to cap the metals, only the perception that a case can be made for them to go down. Now, on Thursday, the reason was even weaker. The decline was blamed on stronger than expected jobs data. Well, the real truth was the number of jobs actually declined instead of it increased. Now, the DOL, however, in their wisdom, did not include seasonal temporary employees for the summer. We know the criteria always changes to benefit the incumbent running for re-election. Now, the other big news that hurt the metals was the increase in the US dollar, which normally moves in the exact opposite direction. Now, the euro keeps collapsing, which caused those seeking a safe haven to move to the dollar. It's not the dollar it's strong, it's just that it's stronger than the other currencies. It's kind of like running from a bear. You don't have to outrun the bear, just whoever you're with. Now, the euro and dollar is near 1.22. If it drops below 1.20, look for the euro to drop all the way down to parity, 1 to 1. Now, the Fed, of course, is going to work hard not to allow this to happen because the S&P would plunge dramatically. So keep a close watch on what is going forward. So the emphasis on the QE3 is deliberate. The Fed's intention is to wait until after the election. More printing now would only increase inflation and make the current administration look worse. Not implementing QE3 now allows the experts to express their concern about deflation. Now, this gives them another reason to hit gold. However, a closer look at the history of gold shows gold made significant gains relative to other assets. Now, not during inflation, but during deflation. These significant gold rallies historically occur when value flees instruments such as stocks and certain commodities. Well, since the 20s, there have been three major gold rallies: in the 1930s, in the 1970s, and the current rally. All three major gold rallies came after a significant top in the Dow and the Dow gold ratio, specifically 1929, 1966, and 1999. With a great portion of the 1930s and 1970s, these rallies occurred when the Dow was falling significantly. Now pay attention. In fact, the biggest rise in the gold price occurred when the Dow was falling or trading closer to the bottom of its trading range during that period. Now, the current gold rally that's been going on since 2001 has mostly been during the time when the Dow also has been rising, with the exception of a short period in both 2002 and the end of 2008 to February 2009. The best of the current gold rally since 2001 has been during a time when the Dow was rising as well. With the Dow still currently relative to close to all-time highs, we believe that the current gold rally has not yet had its best period yet, and it's still to come, and will be during that time when the Dow is falling like the 1930s and the 1970s. I believe this will be proven true in the near future. Well, in conclusion, there's a war going on between those who favor gold and silver and others who are clinging to the last remnants of the US dollar. The tactics utilized by the fiat monetary authorities in this campaign have been strategic dumping of massive gold and silver contracts, or paper silver, as well as the control of the market sentiment by negative hit pieces put out to control us, and they're put out by the controlled media analysts. They want to control our minds and our thought patterns. Now, while the theory to the conspiracy to manipulate the precious metal markets is more than likely being accomplished only by a few, a very select few. The majority of the damage is taking place in computer algorithm trading programs and through clueless analysts who get paid to regurgitate the information that is spoon-fed to them. Now, regardless, it's only a matter of time before the metals start another upward explosion. And for those of you who have owned the metals for at least 2 years, you can relate to watching the metals trade in a range before their big moves. It's happening this way. It's happened this way for 11 consecutive years. So if you're a newer investor and you find yourself underwater, don't worry. Like everyone else, you will be above water very, very soon. I would like to thank Penco Coins for the content of this report. I will put a link down to their website below. They have some great commentary, and it's certainly worth spreading around. Have a super day.